All right, and welcome to the fair value gap. All right, fair value gaps, I use these things for everything. I use them for entries. I'll even use them for exits. I'll use them for support, for resistance, just everything. I use them for high time frame, low time frame. These are going to be very important. Okay, so take note. Great thing is they're actually really easy. Okay, so let's go over what an actual basic fair value gap is. All right, and here we go. We're going to have candle 1, candle 2, and candle 3. Fair value gap is always 3 candles. Okay, and you're going to take candle 1's wick to candle 3's bottom wick, so the high wick to the bottom wick, and you're going to stretch that out. This is an inefficiency. This is in a sense essentially where the market has moved in one direction. Okay, it just it didn't trade fairly here. Okay, so the price delivery was all in one, it was one-sided in one direction. So the idea of this is, since a market is built on like balance algorithms, it's going to come back and revisit this area. Okay, so if we stretch this out, let's stretch it out. Let's go this way and squish it back a little bit. Let's see if we get we come back into it. Okay, so we come back into it right here, and then we move in the London session. All right, so there you go. All right, so fair value gaps. All right, so that's going to be the most important thing. Candle 1, candle 2, candle 3. Now, fair value gaps can be just like this: candle 1, candle 2, candle 3. So let's look at this one, right? Let's move that bad boy right there to the bottom of candle 3, to the top of candle 1, and then candle 2 is the body. So all of this right here is considered an inefficiency. All right, so let's just go ahead and stretch this one out too. All right, I can see right here. Boom. All right, so some fair value gaps are going to have more probability than others. Some are going to have higher probability and lower probability. And usually how I judge that is if they're all in one direction, I think it's going to be more powerful, okay? Because they're all pointing in the same direction. This one was a bearish candle right here, all right? But if in this trade, if I had an SMT, which is basically just a divergence between NQ and ES, okay, we're going to go over that in a separate video. But let's just say like I was looking at this hour fair value gap. We came up, we did all this price action, and we just like, boom, we came down into this fair value gap. I would still be looking for a reaction here. I would still be paying attention on a lower time frame. Am I going to get my entry model? Okay. I see an SMT forming, so that's telling me that we might end up being bullish. So it's something that I can pay attention to. All right, and we did. We had a nice reaction out of this one. So that's usually how I use fair value gaps. And like I said, I use these things for entries. I use these things for, support, for resistances. I even use them for take profit sometimes. If I feel like we're moving up and there's a fair value gap, like from previous price action that looks like it could potentially be in the way and it could cause me a turnaround, I might take profit there. All right. So I use these on high time frames, low time frames, large time frames. I use them everywhere. And the idea behind them is that the market will eventually come back to these inefficiencies and then continue in the same direction, because like I said, we're looking for balance here. All right. So let's go over this again, because these are very, 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 very important. They're used in almost every single model. Master fair value gaps. They're very easy. So candle 1, candle 2 to candle 3's wick, the bottom of the wick. Okay. So there you go. Boom. All right. So let's find a bearish fair value gap. Let's see. We've been pretty bullish and bullet. Here we go. Here, perfect. Excellent. Excellent. Right here. Okay. So we had a candle 1, candle 2, candle 3. All right. I like them. They're all in the same direction. That's fantastic. 1 to 2. Pull this out. Bam. Okay. We get a nice reaction from this, as you can see. So there you go. All right. So I know this was news because I was trading this day. So there's another fair value gap. There's also one right here. Okay. Now, higher probability fair value gaps would be all 3 candles in the same direction and also in the correct premium and discount zones. All right. So basically what I would be looking for in the premium and discount zones, which we will go over in greater detail as I would pull my fib retracement, mainly from the move. I like to do the impulse moves directly. All right, so let's just say like this. There we go. I'm happy with that. So would I use this fair value gap? Yes, I would be looking at this fair value gap very closely because it is in the premium zone where I'm looking to short. But then there's also this fair value gap up here that I would be looking for as well. Okay, so if I'm looking for to short a bearish fair value gap like this guy right here, okay, if I'm looking to short that, what I would be looking for is price to come down to create the range, and I need it to return to premium, because if I'm going to sell my product, which is what you do when you short, I want to sell it at a premium. So if I had a fair value gap down here, I don't want to short that, okay? Because it's not in the premium range, it's in the discount range. Now, if we go back to this price action, okay, and I take this impulse move here, all right, I snatch this impulse right here, boom, okay? Come on, it's sticky. All right, there we go. Okay, so this fair value gap is in discount, okay? This fair value gap was not in discount. So I would not be studying this fair value gap as much because it's up here in the premium range. I don't want to buy at a premium. I want to buy at a discount. Okay, so if I'm looking for price to come up and then come back to discount for me to buy to go up, then I'm looking in this range down here, which is discount. And we're gonna have a whole video on that. That's gonna be a part of pretty much every trading plan you probably put together and build. So there you go. All right. So one last time, fair value gaps. If you've got this, move on to the next video. But no, candle 1, candle 2, candle 3. The top of the wick to the bottom of the wick on the bullish. Stretch that bad boy out and pay attention to this zone. Now, let's look at this. Candle 1, candle 2, candle 3. Okay, there is no fair value gap here. All right, because the wicks go past, okay? There is no opportunity for a fair value gap in these 3 candles. All right, so this is your fair value gap. Practice these because seriously, this will be in everything that you do. So, all right, guys, fair value gaps. There you go.